Alright, so today I didn't trade today. I missed the setup. I missed a very good setup. Alright, I missed a good setup today. I was busy, my phone wasn't charged, a lot of things was literally happening to me. Alright, but these are the things, these are trades that I would have taken, and these are things I would have done. I would have followed my setup, and this is how my setup will actually look like. The first thing is, first of all, I look at the market structure. We have been bullish, right? We got a little bit of retracement. Alright, so today is Tuesday, right? 7th of April, 2026. So the first thing I've done is now I'm looking at this point. Okay, I've seen the liquidity points here. I marked some liquidity points, which are this and this, and the hourly time frame. Right, so this two liquidity, I'm going to be interested in it. So this actually played out 4 a.m. in the morning. Alright, 4 a.m. in the morning. I was not available. I went out. Alright, so 4 a.m. I just got back now. Like, I don't go back now, and I pretty tired, so I have to shoot a video to post on my YouTube. Right, so I got this liquidity right here. I'm interested in these two liquidity. This first and the second. Right, I'm interested in these two liquidity. Why am I interested in this liquidity? As you can see, we've got a rejection from this candle. Alright, we got a rejection from that candle. Then look at this candle also. It's also very rejected. But this is a good liquidity point. So if the market give any good sell entry, I might be selling GBPUSD to this second liquidity point. Get me? Right. So for this morning, for this London session around 7 a.m., that's the trade I will have taken. So if we go down to the 15-minute time frame. Immediately market swept this liquidity. Now, as a trader, in this my strategy, we are not trying to force the liquidity on the market. We want to wait and see how the markets react off of that liquidity point. If it reacts well, we know that liquidity was strong enough. If it doesn't react well, we look for another liquidity. As one thing most traders do find this complicated is they map a lot of liquidity and they start entering position at every chance they get. Alright, every liquidity spot market goes to they try as much as possible to lock in position, which is not meant to be so. Right, so now, like I said, we have these two liquidity areas that I'll be interested in, which is this and this. You get me? I'll also be interested in this selling part, but I'll only be interested if we got a break of structure here. Only if we got a break of structure here. Get me? But I don't think we had a valid break of structure here. Though it might seem we had, but once you have a break of structure and the next candle is an engulfing candle, like an aggressive engulfing candle, that is a liquidity sweep there. Right, so most people do this mistake and enter a sell immediately. That is the first breakout. So these are things you need to learn, and your other confidence should be able to stop from entering this kind of trade. Right, so the same way I trade, I marked out the liquidity I'm interested in, to the upside and to the downside. You get what I mean? To the upside and to the downside. So the first liquidity that first got hit, and once I see my strategy off of that liquidity, I'm going to buy. Again, so I mark out my liquidity to the buy side and to the sell side. Anyone that first got hit and creates my confidence shows there, I'm taking it in that direction. I don't care with it one around the reverse. I just took out, I traded my strategy. Okay, so we've gotten this liquidity points. That was the first confidence. Second confidence is we want to go to the what's it called? Other time frame, like 15 minutes. So also look for some kind of entry there. You get what I mean? So let's look for entry there. Right, so on the 15 minutes, what we had now, was two different things on the 15 minutes. And the first thing we had was this liquidity here. It was taken, but on the 15 minutes you might think this is a what breakout, and whereas this isn't a what a breakout. This is literally like a fake out. You get what I mean? This is literally what a fake out. So we've seen this. We've seen the structure on the 15 minutes, something like this. And remember, the 1 hour we are waiting for the market to react. And one of the reaction, one of my final conflicts is usually the impulsive movement. Alright, we have break of structure right there. If the market break above this is regarded as a break of structure. Right, so markets might do something like this and eventually break it. But this also signifies about break of structure, but this is not a strong break of structure. Okay, the law called displacement. Alright, in markets, displacements. So displacement is what I use to finalize my entry. Once I say displacement, I follow it because displacement is an aggressive movement. It's an aggressive move, to a certain direction. For example, instead of market to do something like this, market just move aggressively to the upside. What do you want to do? We want to enter immediately. We want to get breaks above and put our stop loss. We need that and target our 2 ratio or 3 ratio. Get what I'm going to explain that in a bit. I'm going to show you guys in a bit. Now, for example, let's take this one example. Remember, we've mapped out what our liquidity points. Not are we now looking at for now. What we're looking at for now is what we're trying to, buy, because if we thought that this is what a liquidity sweep, right? So we're looking for what an impulsive move. So we're looking for a liquidity that is moving towards the 1 hour liquidity point. Do you guys get? We've gotten a 1 hour liquidity sweep here. Alright, so we want another 15 minutes liquidity sweep. You get me? That's going to be, facing towards the 1 hour point. Let's say, for example, we got a sell 1 hour liquidity sweep. We also want to have a sell 15 minute liquidity sweep to enter. Guess what I mean? So for this 1 hour liquidity sweep, we had this, right? We had this, then we have this sharp engulfing candle, which immediately start taking sellers out. You get what I mean? Right? So that is the first liquidity point right there. So that's just one confluence. Second confluence is we are waiting for a 15 minute liquidity sweep. And liquidity sweep is literally what? Everywhere. You get what I mean? Liquidity sweep is literally what? Everywhere. So we have this bottom here as a liquidity sweep. You know what I mean? Right, so we have all these points, all this, the bullish points. So, remember it was a bearish liquidity sweep. Then, we are taking it to the upside. So, we're looking for a bearish liquidity sweep on 15 minutes towards, that same direction. Do you get what I mean? So, we're looking for a liquidity sweep that's moving towards that direction. Now, we've marked out various liquidity, which are the bullish candle. Right, so we wait for one of them to get swept, and once it gets swept, we are going to be looking for an implosive movement, right? Implosive movement that creates a breaker structure, and that will be found under the 5 minutes. Now, as you can see, we have this breaker structure, right? But what we see again is we had this, or this is going to be what a breaker structure, or some call it change of character. Right, so this implosive movement, this is what we call displacement. You see, we have multiple bullish candle, which is bullish. But as you have seen, the market didn't break above this break of structure. This protected and it doesn't break above. But what does it do? It started weakening it out, weak, and that is a no for me. That is a what? A no for me. You get what I mean? That is a no for me. Okay, so this liquidity point failed. Alright, so that liquidity point what? It does what? It fails. So what are we going to do again? We're going to wait. And as we wait, we had this spike, then we have this retracement. Remember, we're looking for the what? Liquidity points. We had this. We also had this point, but as you can see, market broke below them, so it's not valid. I think this is valid. We mark it out. Go to the 5 minutes, look for an explosive. Right, so now what do we see? We see a break of structure here. Now what do we see? We see an implosive movement. Right, so this implosive movement didn't happen at once. But what it did is it created a what? Higher low. Then as it created a higher low, our break of structure is going to be what? Meant to be here. And as you can see, immediately the market retraced. Remember, if the market wants to continue to the downside, it should at least break below this point. You get what I mean? It should at least break below this point. That means the market should have moved in this direction like this, and break below that. So the market wants to continue to the downside. But as you can see, the liquidity held its place and keeps pushing the market to the upside. It's held its place and keeps pushing the market to the upside. And what else did we realize market did? Market pushed aggressively. Boom. And this is the kind of aggression I'm talking about. The aggression. Pum. See, it didn't just start weakening and be dancing around. No. First push, second push. It busts it out. It break it so aggressively, and look at how far. And I think this is kind of like a news, because see how far it went. Then it decided to close down. I think this, I don't know, it might be news and it might not. But what we want is for the market to break out aggressively, which it did. And what our job is to what? Enter the buy from there. Stop loss should be, at the protected low, which is there. Stop loss should be there. Then we can target our 2-1 or 3-1. And that would have been an easy trade for me to take this morning if I had been on my system. I was so busy, I went out and I just got back now and I opened the chat and saw this one. I could clearly do a video for this today. Right, so that is for the trade. And let's see if I'm to trade now. If I am to trade now, we are pretty much in a bullish movement. But as you can see right now, market keeps sweeping, keep retesting up off of this liquidity point. You get what I mean? Keep retesting off this liquidity point. But I'm just mapping it out that it keep retesting. It didn't count, like I did not count it as a liquidity point. Yes, the market just keep retesting off of it. The liquidity point I'm interested in is this, right, or this. But one of the good things is it doesn't matter which liquidity point you're interested in. What matters is how does the market react in a specific zone. And if I should look at the 15 minutes, you can realize from this point there, market has been testing and I didn't break below this. So this is a strong liquidity point. So I've mapped out all these liquidity points. My job now is to look for an impulsive movement, a displacement on 5 minutes. And as you can see, I think we've gotten one. And I think I'll be entering this trade now. Why? Because we've gotten a strong bullish, aggressive movement to the upside. So I'll be entering the trade now. GBPUSD buy. Entering that now. Alright. As you can see, we've had a strong bullish movement to the upside, which wants to kind of create a double bottom. As you can see, so I've entered the buy. So I've entered the buy, and my stop loss placement is going to be on the MT5. I entered at around so this is an ETP plus, and I entered at around 32552. So that was my entry. That was where I entered. So my stop loss is going to be beneath this point. We're going to be beneath this point. As you can see, this is a strong displacement out of this. There hasn't been a single bearish candle. It has always been bullish. So this is a strong movement. Alright, so normally I was meant to enter the trade at the retracement of it. We have a fair value gap now that just got mitigated. As you can see, we had fair value gap, and this is kind of a good trade. Normally I'm meant to put my stop loss beneath this, but I'm just going to put it here for now, because a credit candle can just come out of nowhere and sweep liquidity beneath this point and this point and decide to continue upward. You get what I mean? So this is the trade I took now, and probably I'm going to show the results on my Telegram channel. But this is the trade I entered now. My stop loss is beneath that. Alright, my stop loss is beneath that. My take profit can be 2:1 for now. 2:1 for now. That's the trade for today. That's the trade. Thank God I was able to cut this live. So the result is going to tell us. So what I'm going to do now, I'm just going to set and leave the trade. And I set and secure the trade. And I'm going to set the trade now. I've set the trade already. I'm just going to set an alarm to notify me once I hit stop loss on my phone. And I'm going to place a stop loss, which I haven't done yet. There's a place of stop loss now, which is 32360. 32360. Good. So I've done that already. I'm in profits. I'm already moving in blues. So what I'm going to do now is I'm going to be posting my results on my Instagram page, which is this is MG, which I'm going to see on the screen right now. So I'm going to be posting most of my setup on my Instagram stories. I'm going to be posting it on my Telegram. Sometimes, for example, this trade I took, I didn't send it to any group. I didn't send it to my VIP. I didn't send it to my free Telegram channel. I just took it individually. So for you to have access to kind of trade like this, you can go and follow me on my Instagram, which is this is MG, and you guys can be watching my stories to see trades like this. And that will be for this video. I'm going to see you guys in the next video. So I'll be posting my outcome on my Instagram story. You all should, endeavor to like, subscribe, and share this channel so that other people can get so that the algorithm can push this video around. Other people can watch it and we can grow together. The cerebral effects and G. See you guys in the next video. Guys. Okay, now this alright. We eat take food TP on this our trade yesterday. Alright, we eat food TP on our trade yesterday. They'll be targeted to our market went all the way above our take profits. Alright, so this was initial to our and I did this analysis. Alright, I caught this trade on live stream while I was recording. I caught this trade, and the reason I mentioned the trade, I said everything on live stream. This is how the trade play out. It was so close to it, our stop loss, so close. It was so close to this point, it our stop loss. But as you all know, I've predicted it one time, and the markets bounce back and moves aggressively. I think I entered another position here, and market moved up, so I take profit. Then it started a little bit of pullback, and it's broke above. I couldn't enter this trade because it wasn't an aggressive pull. Was ultimately said our take profit was peace, and I was kind of pained that I wasn't able to, that I left money on the table. This would have been a lot of money. Man, I don't know. Lately, GBP has been moving in the midnight aggressively. I don't know what's happening. That's really been moving by midnight, like seriously, moving crazily aggressively. I think the same thing happened to gold XAUSD also. XAUSD also was in a crazy buy movement. Right, XAUSD was in a crazy buy movement. Let's see. Yes, can see XAUSD was in a crazy buy movement. I've been creating a lower low. Sorry, I have higher highs. Okay, so this is not my pair, GBP is my pair, and our TP got hit initially, but I couldn't hold this overnight. Immediately it might take profits. I was taken out of the trade. But I don't know why. Wow, the movement was so aggressive, man. So aggressive. Just so aggressive. So that is for this video. I'm going to do a video today also on how I'm going to trade today. I'm also going to trade today. If I see an opportunity in the market, I'm also going to trade today. And if I don't, how it's been done.